Hi guys, welcome back to another video tutorial for the beginners series on forex trading. We have been making progress so far. So on today's video we're going to be talking about types of charts. Alright, so on today's video I'm going to be talking about types of charts we use in forex trading. So there are three most popular types of charts we use in forex trading. The first one is line chart. The second one is bar chart, and the third one is candlestick chart. So I'm going to be explaining each of them respectively and show you how they came about. So the first one is line chart. Line chart is a simple line chart. Is a simple line chart. Draws a line from one closing price to the next closing price. So that's just how line charts come about. So here's an example of it. It's just basically seeing the market as a line in form of line, and you could say the market is bullish, you just see the lines trading up. Market is bearish, you just see the line trading down. So basically analyzing the markets with lines. So that's the first kind of chart we have. And then the next one is bar charts. So what a bar chart? Bar chart is a little more complex. It shows the opening price and the closing price of any currency or any pair. So that's what we do it that bar chart does. So basically shows you the open, the high, and the close of the day. This is how a bar chart looks like. Shows you the open, the high, the low, and the close of the day. So this is what we call a bar chart. So, and this is how it looks like in the market. Okay, I could still use my MT4. On MT4, if I click here, you can see I'm looking at the market in the form of line chart. If I click on this one, I'm going to be seeing the same information on bar chart. You can see how the bar chart looks like. It's showing me the open, the high, the low, the close of the day. And then if I click on the last one here, it's candlesticks. Okay, this is candlestick. So if I click on candlestick, then you see the market goes back to candlestick chart. And that is the third kind of chart we have. And basically this is the one I'm going to be dwelling more, because that's the one we use every day in the market. You can't really analyze the market direction using just basic line chart. And then the bar chart has been used for over centuries at the beginning stage of the market. That was how professionals were able to analyze the market, due to the open, high, and close of the day for the market. They use this information to analyze. So let's talk about candlestick chart. So candlestick chart shows the same information as bar chart, mostly the high and the low and the close of the day, but it's more prettier, and in a graphics format is more the interface is more friendly. You can easily understand what the market is saying using candlestick chart. So candlesticks bars still indicates the high to the low range and the vertical lines and everything. But now, however, this one has a body. It has what we call body. So a candlestick chart has a body, which signifies the direction of the candles. So uh, as we're looking at the markets with the informations there, or with the way the candles are looking, you can easily tell, okay, if this is a bullish candle or if this is a bearish candle. So alright, so you can see here we have the open, the low, the close, and the high. So this one, the candle closed above the opening price. That makes it a bullish candle. That means the market is buying. Here the candle opened and closed below the opening price. This is the low, this is the high. it's called a bearish candle, and this is the body. The body, most of the time, the size of the candlestick tells you the strength of the market participant. So this here, they're saying upper shadow. It's kind of like the wicks. Every candlestick has wicks, so you can call it upper shadow or wicks. So that's how we come about that. All right, so candlestick is more better to analyze the market. So here are some reasons you should know for you to use candlesticks. Candlesticks are easy to interpret and are good place for beginners to start figuring out chart analysis. So you can easily identify the market using candlesticks, and candlesticks are easy to use. So your eyes adapt almost immediately to the information in the bars. You are just seeing them. Candlesticks and candlestick patterns have cool names. So there are different patterns, and we're going to be going through them very soon. Uh, Different patterns of this candlestick that could help you to analyze the market or tell where the market should go. So let me talk about this bullish and bearish of, if I say the market is bullish, how do you understand that information? So let me just market higher, and then bear, it's from this animal, a bear. When you say the market is bearish, that means the market is selling. It fights using the head to hit something down. So you can see that's how we come up with that those terms in the market for bullish and bearish. Support and resistance is one of the most widely used concepts in trading. Strangely enough, everyone seems to have their own idea of how they should measure support and resistance, and that's true. The way the retail traders, or should I say majority of the people or the market participants, draw support and resistance, that's different from the way I draw. But for beginner traders, well, support and resistance simply means if the market is trading, the market takes bounce up from its support. Just use the analogy of your room. Now, the market hits the ground and takes support and bounces up. Then it hits your ceiling or your roof and goes down. That's resistance. It doesn't goes above your. It doesn't go higher than your roof or your ceiling, and then it bounces down. So support, hit the ground, hit ceiling, resistance, and like that. So that's kind of like the analogy we use sometimes to analyze the market. So you can see how it works here. This is resistance, brings the market down. Support takes it up. Resistance brings it down. Support takes it up. So you need to add that to your notes. And in terms of technical analysis, all right. So as you go on, you know how to mark your own support and resistance. So you could read notes and see how they plot their own support and resistance here. But I'm just teaching you that you could know that we use support and resistance in analyzing the market. So basically, support is like when you can call a level a support level is when the market has respected it maybe 2 or 3 times. Like here, the market came down, bounces up, came again, bounces up. You can call that a support, but you can see the market went through it now and reversed. So, but support and resistance levels are levels where the market keeps on respecting that particular area for like 2 or 3 times, and before it goes through it. That's how we come about support and resistance. The next thing you need to add is trend lines. So what are trend lines? So trend lines are part of our technical analysis. We use that to maybe analyze the market. Like I said, basically it's for retail traders. I'm just informing you. As a beginner, you need to know about trend lines. So it's basically drawing lines like this. Sometimes we call them dynamic support and resistance. So we draw a line and the market hits reverse. So trend lines are diagonal uh, lines that we draw in the market to maybe predict the next market direction. So they use that as uh, should I say dynamic support and resistance. So when using support and resistance too, if a support is broken, it turns resistance, and then if resistance is broken, it could turn support. For example, here you can see the markets took support, bounces up. The markets hit resistance and is bouncing down. Here they were just telling you how to use them, kind of like in your trading. So this is what I want to explain. So let's say we have a support here now. The market is coming down. The market in bounce up from that support. If it breaks through it, it could go back to it and retest it as a resistance. So that's why we call them support and resistance. So a support level can later act as a resistance level. You got that? A support level can later act as a resistance level. So you can read more about that from the notes, but like I said, I'm giving you the most vital informations. So these are the things that you need. So that's, I didn't talk about channel because channel is still kind of like support and resistance too. It's still kind of like support and resistance. So on the next video now, I'm going to be diving more and talking deep about the Japanese candlestick, because that's majorly what we're going to be using in the markets or to analyze the chart. So hope you find this one insightful.